Weak numbers coming in from the Bajaj Group companies. Bajaj Finance, they've reduced the long-term ROA and ROE guidance. They've cut the long-term growth guidance. So that's clearly not auguring well for the stock, which continues to languish about 5% lower as we speak right now as well. Kunal, what do you see on Bajaj Finance? Do you think there could be some more pain down the line?
Yeah, Isha, I think what's happening actually is that the pattern for the markets are changing. Bajaj Finance was one of the strongest name in the entire rally, which started off on that Jan Feb lows for the stock and then March lows for markets. But then in the last 1 week or so, the stock has ebbed off, I think if I'm not wrong, 1,000 points from 96,9,500 to 85, 8,600 where it's trading right now. And that's a very sharp cut for a stock like Bajaj Finance. Now today, of course, the reaction of the stock is based on what transpired on the results or the expectations post results. But then I think ideally we wait out for maybe 1 or 2 days max. If the stock gets into a follow through downside, say over the next couple of days, breaks below that 8,500 mark on closing basis for the next consecutive 2 days, then I believe that could be an indication that traders are not just expecting the stock to correct post results, but they're also expecting that the stock would drag and correct further. So I think 8,500 could be a critical support to watch out for over the next couple of days. If the stock falls below those levels, then I believe that there could be more 300 to 500 points selling also further, which could be possible.
Well, much of it would also be dependent on the way the rest of the market also moves. Yeah, but 8,500, let's see whether that gets tested or breached, like Kunal is saying, and whether that happens in the next few days owing to the earnings disappointment. But what's the disappointment? What is the street now saying? Is there going to be a derating after the numbers that we have seen? Varun is here with that analysis.
Definitely. So it looks like that the dividend and the stock split and bonus are not going to work for the stock today, because the overall results, if you look, it's a miss on what we were expecting. If you look at the NII, we were expecting it to come at around 9,866 crores. It has come at around 9,807 crores. Also the profit we were expecting 4,574 crores. It has come at around 4,480 crores. So there is a slight miss. Also the pre-provisioning operating profit, there is a growth of around 24.3%, but it is less than what we were expecting. No doubt the gross NPAs, they have shown a good decline from 1.12% to 0.96%. But if you look at the commentary of the company says for FY25, the company has missed its net interest margin, credit cost and profitability guidance. In fact, for FY25, the NIMs have shown a compression of around 49 bips, and the company says for Q4, the NIM is actually lower than the overall FY25 NIM. For FY26, the company expects the profit to show a good growth. The AUM, that is expected to grow by around 24 to 25%. Now for FY25, the AUM growth was 26%. So the guidance that the company is given is lower than FY25. The cost of funds, they are expected to decline by around 10 to 15 basis points, and the NIMs are expected to be stable. Now for the long-term guidance, the company has reduced its ROA and ROE guidance. The ROA guidance now stands at around 4.3 to 4.7% and ROE 19 to 21%. The company says that the new business is doing good. The overall B2C business, that is shaping up good. But yes, there are some challenges in unsecured, personal loan segment, especially in the urban areas. So if you look at the overall results, it's a slight miss. The commentary of the management, yes, it's okay, but the overall growth guidance that the company has given has actually disappointed, especially for FY26, and the long-term guidance, the company has cut that.
If you like this video, then like, share and subscribe to ET Now.